Hi, we received word last night that the federal government is close to the end of its record-long shutdown. And as a result, we're seeing a rally in assets, in particular, more risky assets this morning, which is great. It's nice to see a rebound after we had a pretty substantial sell-off in some of the market leaders that we've seen this year. So it kind of started last week with the report from Palantir, which was exceptionally good from a fundamental perspective, but valuations have become fairly stretched, and it's really going to take a lot of these companies to substantially exceed expectations in order for these stocks to continue to go up. With that, it has been healthy to see a correction, to see some profit taking and some of the high flyers that we've had this year, and to see a market rotation happening. So usually when you have really narrow leadership like we've had this year, usually that's not sustainable for a long period of time. And when you have a pullback, which is what I think at the most, the NASDAQ was down 5% last week. So we never went into correction territory, but we do have some individual stocks in correction territory, but certainly not the indices. But when you do have a pullback, one of two things happens. Either as the leaders sell off, they pull the whole market back, or you do get a rotation. And we had a very orderly sell-off last week. The leaders really pulled back, and some of the more value, more conservative stocks actually had money flow into them, and they performed pretty well. So that's relatively healthy. So today we're getting a rebound in the more aggressive stocks, which is great to see and not a surprise. I think the question moving forward is, what will the tone of the equity markets be? We still have CoreWeave and NVIDIA and some of the market leaders, or some of the companies more focused on AI, still to report. It'll be important to see how the market behaves after we see those reports. And then also, whenever the government shuts down, it always takes a while to get things started again. And one of the big risks is when you have people who aren't paid for a prolonged period of time, they often leave the public sector and move over to the private sector. And so restarting isn't as simple as just calling people back to work. A lot of times you've lost individuals and you have to go through a rehiring process. This being so close to the holiday season, it could certainly have an impact on travel plans as well as consumer spending. So I think it's going to be really important to watch the data as official government data is re-released. And then I think the other thing that's really important to watch is really what's going on in the credit market. We did see credit spreads widen to the highest level they've been in a couple months last week. And again, credit spreads are still relatively narrow and tight where they have been historically, but it's really important to watch the trend there. Thank you so much.